Alright guys, so I remember what I said Wednesday was pretty much, that was around here I think. Teens, 15. So pretty much around here, I wanted to see whether this high was going to be maintained and we continue bearish structure, or we were going to essentially mitigate something here and start taking out previous highs and then starting a new trend. So for the most part so far, I was expecting a bit higher. I really wanted the full premium to continue lower, but we did get a correction and we're pretty much back 90% of this range. So unless we pretty much take out this high here, we're pretty much probably just going to continue, especially inefficient pricing. Potential equal highs may be there, but overall previous highs are maintained. This high is previously maintained, so we can only assume bearish structure. It's pretty straightforward, but the only thing I dislike is the fact that we're still in heavy discount in terms of the entire range. And not only that, right, we're still in heavy discount of this entire range, and this is still struggling so much to give this move. So I want to see what happens. Since we're still in bearish structure, we're probably going to take out that low, but I want to see what happens after that low is taken, right? We're either going to see a full follow through or we're going to see a quick rejection. And if we get a quick rejection, we'll probably get a pullback or even take out this high and start retracing back. But who knows? It's just a matter of seeing what happens this week. But we did get a very bearish closure this week, as you can see. So momentum is definitely still to the downside. It's just a matter of continuing that and essentially, trying to catch that continuation, because if this is fully taken out, then we'll easily see this target be taken out, and then that's a full structure break to the downside, right? So that would be right, lower high achieved, break of lows here, just continuation of structure. But the only issue, like I said, is pretty much seeing how much this is struggling and seeing how strong this next impulse is going to be. So who knows? And honestly, that's the biggest reason why I just haven't been trading this. Like, it's just 20 pip moves, 30 pip moves, and retraces all the way back. It's not appealing. So just my attention has been on this, on GU, just pretty much hoping that this is a bull flag and we're pretty much going to start looking to take out these highs here. I remember, as I said, as I said Wednesday, this was the previous low that created the no impulse. So we came back, mitigated 50%, and then we narrowed that entry down, and we got a very good reaction. And then as soon as we started pulling back, we started seeing how corrective this was. And even though this was looking messy, right, to judge the direction, to me, I'm just focused on that daily bias and hopefully taking out these highs eventually within the next couple months. And since I saw this candle, Wednesday's candle, after the entry that I showed you guys and the reaction, right, I assumed that that was a new intraday low. Right, so we took out a previous high here, but we maintained previous highs. However, this reaction is now the swing low of the range, and obviously where we topped out is the high of the range. So we came back into discount, and I was pretty much waiting on Thursday whether we were going to come back to tap these candles here. So I pretty much found a confluence. For one, I was at the H4. Let's see. Initial POI, just because I like how we pretty much just shot down and then immediately went back up, and that would have been my first point of reference. And then we just go through the time frames. Same thing as 2 hour, 1 hour, that would be the open of that. And we continue till I believe the 15-minute. Yes, it was. So the open of that H4 also matches with this inefficiency fill here. Potential inefficiency here. And it matches with the closure of that. So that's now a second confluence. Then I keep going. 6 minute, 5 minute. And what I like here is that now there's an inefficient pricing inside of that zone, and that now creates a very secluded area for me. So that would be relatively the closure of that inefficiency. And this is now here my point of interest that is derived from H4, H2, M15, and M5. So as we approach the next trading day, right, this is what I had laid out that area, and right, so we didn't reach. And remember what I told you guys, only trade when your POI hits and your pricing hits. So this now to me is just a low of liquidity. Not to mention this happened during London. And that London reaction failed to break highs, but we did have a very impulsive move in comparison to this downside move. So momentum is shifting to the upside. It's just a matter of finding an entry. And when it comes to that, I just wait for my times of interest, and I do have my points of interest referenced. The first reaction was a 30-minute inefficiency. Yes, it was. Yeah, it was. Nice. I didn't see that actually. And from there, what time is it? 17. $6 a.m. Right, so here, this was pretty much yesterday morning. I believe, no, two mornings ago, or yesterday morning. And pretty much what I was seeing is that we're creating equal lows. We have corrective structure. So I can only assume that we're going to pull back. But because my daily bias is bullish, I'm not looking to sell this. All right, I'm only looking for an excuse to buy as long as I get the excuse to buy. And pretty much the next candle immediately shoots down. And it was all about the reaction here. Right, obviously from that M5 POI, 50% is key, as you can see. As soon as that tapped there, we had a very impulsive candle on diminishment of volume, right? This now shows instability to continue lower. So anywhere here could be your entry. Right, so anywhere here is your entry, and you can easily set your position right above 3.5. So from there, that would have been my scenario. Right, I see the rejection. I like the rejection of the 50%, and we're starting to stall here. Right, as I'm gonna show you with the next candle. As soon as I saw these two candles, I saw the next candle, and this is actually where I entered, which was on this last candle. So it was around somewhere here. and my stop was right below below the inefficiency fill. I just mainly did that because we're starting to show rejection, and we had a very good reaction from 50%. So if you even want to go as far as to mark out this area of interest there, you can. I didn't, but that's a very possible scenario. And pretty much from there, that was my risk, and I was obviously targeting at least these previous highs, because if we take out these previous highs, then any pullback would be a correction to then go higher. And from there, right, we got a reaction, even though we came back to fill previous inefficiency there. The reaction caused a very just corrective mess. So I was still very bullish on the bias, and I had no reason to close. But obviously I am at break even anywhere here. And from there, that's taken out. These highs are now taken out, and pretty much that's where we are now. Those highs are taken out. So I want to see, I don't think we'll reach back down here, even though we did have a move down here and then went up. This wasn't impulsive enough to me. So honestly, the deepest I see it coming back is around here, if this is deciding to essentially continue. So I mean, yeah, pretty solid trade, and that was pretty much my main trade of the day yesterday, which was about 50 pips. Yeah, 50 pips, solid. I know Chris caught that too, very nice. I don't know if you went in deep in the smaller time frames, but I do know that you caught the trade too, which is good, and that's what matters. But let's see, 18 people on. I mean, outside of that, there isn't, like, I've only taken 2 trades, and I've shown you both trades through both Zooms, so it's pretty much been, slow week, kind of, I guess you can say. So do you guys have any questions? How do you highlight the trading hours? I made a video on it. It's under extras. It's this. But these are the overlap settings. Yeah, they are. Do you trade indices too? No. I only trade EU and GU. Sometimes gold. And then sometimes I have another pair, but it's only if I have a nice setup for it, or if I'm trying to piss somebody off. Could that move be a liquidity grab to go further down? How so? Take out highs and drop. Well, here's what you have to remember, bro. Equal lows aren't meant to influence your bias. Equal highs aren't meant to mess with your bias. All they are is targets to me. How you differentiate a liquidity grab versus a BOS? How bad the reaction is after that point of liquidity, or that point of structure is taken out, whether it's a quick grab or if it's an actual follow through. Right, for example, let's see, there is an example on EU. So even though that pretty much already went back, Where was this? It was like here. Like this is like the whole, pretty much, how do you say it? Like the, I hate to put it like this, but like the typical smart money setup where it's like equal highs, take out equal highs, and then reaction, right? But how come we got a reaction to downside, structure didn't fully break, and we continued higher? How does that make sense, right? So like I said, these equal highs are only a target, or and they aren't a, you know, influencer of bias. So even here you see it twice. Let's see. See, you see that? Pretty much took equal high liquidity here, then took out, then went on and took out previous low here, but we just took it out and then reacted back. So that's a liquidity grab, whereas this here is a structure break. And notice that at the end of the day, this maintained its higher time frame structure, which is then your daily structure. So it's all structure. The whole equal highs, equal low stuff, it's just meant to be a target to me. Yeah. But other than that, I mean, honestly, this call is pretty short. Nothing's really been going on. EU's been stalling. I think gold's been stalling too, kind of. But it looks like it's finally wanting to pop. Right, you could even see this again as a type of reaccumulation, but the creek is very hard to differentiate. So I'm just thinking continuation. Just continuation range and continue higher. Just because I do want to take out those all-time highs up here. I guess the same thing applies to when price wicks down to mitigate something. Yep. Just like the GU, I mean, like that's pretty much exactly what the GU trade yesterday was a liquidity grab, but the reaction was so strong in the opposite direction that I wouldn't consider that a structure break. So it's all reactions, bro. Essentially, that's all it is, reactions. But yeah, guys, other than that, do you guys have any questions? I know we got a couple new guys, but for the new guys, just chill, enjoy this for the first month or so, and then we can start going through journals and stuff. But yeah, other than that, guys, I think we're good. Unless you guys want to talk about something. I don't really have a topic for this morning. How's your recovery at the moment? It's chill, bro. I'm pretty much cleared. I mean, I'm sprinting, I'm doing drills, I'm, you know, chilling, enjoying.